Hello. Hopefully, I am live now. Just to get trade at this level, let me explain trade. The weekly was bullish, previous weekly as well as this weekly. The daily was the previous daily was bullish. The this daily made a steep bottom wick, and now let's see the 4 hour. The previous 4 hour was bullish, although this 4 hour looks like a rejected candle, and the previous 4 hour was bullish. Let's see the 1 hour candle. So the previous 1 hour was bearish, but if we see here, I see support getting formed on the 4 hour. So as long as we don't close below the support, we'll be bullish. Let's see the 1 hour. Another thing I saw is the structure. And the structure had a higher high at the top, then a lower low, right? And this seems to be a higher high because the previous high got broken here. The 30 minutes had a candle in my direction, so I took a buy on the retracement. Let's see how this performs. I just forgot that I was having my mic off. So if this 15 goes us bearish, I will close off my position. Although I don't think I will be able to save any money here. 30 minutes was a good enough setup, but the issue was that the forex chart was completely different. Let's have a look. So the forex chart broke its low. The candle was pretty weak. The 1 hour candle has a support to the left, but the 4 hour does not have any support here. So those both of those charts are different. Let's see which of these charts hold the ground, and let's see if the 30 continues in the 30 direction or the 1 hour has a continuation. Feels like I'm going to get stopped out here, and that's okay. It was a great trade, unlike the trade I took, in the London session. Just before the London session, well, there was no volume. The 1 hour lows are broken. I think they were already broken. I don't know why it is playing at the end of this. The 15 lows are broken, but that's the real struggle. I don't know what's going to happen. Seems like the 15 is not going to break out to the downside. It's a kind of a support for getting found. I'm going to move my stops 1 to 2 pips further down because I don't want to get liquidated and then the candle moving towards the upside. As I hit, it was a good trade. Let's see the drawdown we have. Right. I see drawdown for $10,863. So the last few $100 are remaining in the challenge. Let's see. So we have a minimum limit of 1467. Let's calculate the drawdown. 49,863 minus 49,467. $396 remaining. So let's update. Could I reverse the position and got a good enough risk to reward? Would I recover the loss? Let's update the stats here. So 2011 minus 49,863. So I lost $148 here on this trade. So let's calculate everything. So 4 and 48 becomes 52, and this will become 552. So lost my $552. The profit has become loss. Loss of $37. No, $137 is the right number. Loss $137. Target will be 137 plus 3000. So $3,137. The drawdown remaining is $396. All right. Last target drawdown Everything's fine. $1,050 more to recover the drawdown. It has to be changed to, I think, 396. So $1,604 more to recover the drawdown. Alright, these are the stats, and I think it was a decent chance I had given to it. Full buys. One loss position, and I won't be trading more. So, given that I am in deep drawdown and I don't have much of the percentage remaining, I started with a drawdown of $2,000. I am still around break even, but the drawdown got worse and worse, and I am currently having only 20% of the initial drawdown. So $2,000 just got reduced to $400. That's why I'll have to change my strategy. I am having some idea of what I need to do. So I will just brief you live, and that will keep me accountable. So I will be trading next week. Here's the first point. This week I am having pretty big drawdown and a good enough losing streak, let's say. So my psychology want to be the best here. It's better to start again next week with whatever $400 I have and work with that. Then the $50 per trade cannot be sustained, right? I will have to risk 25% each. So let's put it here. Risk 25% of the drawdown, which will be $100 per trade, and the add-ons will be $30. I am trying to keep it 30% of the trade, right? I will be aiming for base hits, and I'm going to change these numbers a bit. My first TP will be around 1.2x, and if the runner is there, let's change this. First TP will be around 1 to 1.2x. And the runner will be around 2x to 2.5x. I most probably won't have any runner more than 2.5x, but I can trail it and have a bigger risk to reward in that way. So the TP will be, the first TP will make me $80, $100 per trade, and $100 per trade, and 1x will be $100. And let me tell you why it is $80 in a bit. The second TP will be, so overall I will making 2.5. If I make 2.5x with the runner on a 50%, so it will be 50 into 200 and half 125. So in that case, TP will be $50, right? So let me explain the situation in a bit. $175. So TP1, if I book 50 percentage of my position on TP1, then it will be $50, assuming I am having $100 per trade of risk and I am getting a 1x. So the minimum I make will be 50 percentage. The maximum I can make will be if I book 50 percentage on TP1. TP1 is 50 percentage and TP2 is the other 50 percentage. And if I am getting 2.5x on the second half of it, it will be $50 plus $50, and this number will get $125. So the total turns out to be $175 that I can earn this way. And that's why I will be earning somewhere between $50 to $175 if I get a winning trade. So this is the minimum scenario, and this is the maximum scenario. That's it for the risk management part. One extra thing I have to explain is, so let's cover the remaining text here. It says one loss per session that might get changed if I recover from the drawdown, because sometimes what happens is that I have a loss because I had a wrong bias or something happened, and the bias changes with time, right? If this low got broken, it's because the selling pressure is too high. So I could have entered here, putting my stop loss above the previous candle, and would have made money and recovered the loss, and would have been profitable for this session. So that's why it's subject to change, but I'm not sure if I should do it or not. We'll have to get out of this deep drawdown, and if I have a decent enough profile, then I might do it. Another factor will be my psychology. If my psychology gets better with time, I don't do emotional mistakes, then I will be changing it to 2 losses per session and maybe 3 losses in a day, or we'll figure out. So the same thing applies here. I have a month to clear this account, and today marks 8 sessions, but still 32 sessions remain, if I'm not wrong, because we have 22 trading days. Let's calculate it again. 22 trading days and only 4 are gone. So we have 18 remaining, and the 18 into 2 is 36 more sessions. But let's say I don't trade 4 sessions because of some reasons. I will still have 32 sessions to come. Also, uh, February does not have those many days, just 28 days. So there is a chance we don't get much sessions, or we have a bank holiday or anything else. Now the risk will become $100. But that is the psychological part. The psychological part keeps changing when I get into more and more drawdown, but it is still recoverable. 30 positive trades, so it is 30 net positive trades over whatever period. It can be a year as well. If I make 30 net positive trades with a 1 to 1 risking $100, I will be out of this drawdown. If not 30, 32 will do it. And let me tell you why I don't need 32 net positive trades, and it is simpler than we currently think. So even if I risk $100, risking 25 percentage of my drawdown, because I don't have that much money left, I can make this work. So this is a spreadsheet I created a while ago. It says 20 pip challenge. So I was inspired by the 20 pip challenge and I wanted to do something like that. So I created a whole spreadsheet out of it. You don't need to get into the details here. The only things which we should be concerned about is the full risk, which is 25% for me. I have made every single trade a full risk trade. So we'll be risking 25 percentage of our account, right? No. If I have an SL of 20 pips, I won't be having an SL of 20 pips most probably. But let's say if I have an SL of 20 pips, I take a profit of 25 pips. It will be a risk to reward ratio of 1.25. Yes, 1.25 will be the RR, the risk to reward ratio. So even with such a low RR like 1.25, we can recover our account pretty quickly. Let's input $396, which we currently have as our drawdown, and we'll be trying to compound it with every single trade. So the risk will increase, the lot sizes will increase. The first trade, if goes positive, gives us $520. The second trade will give us $631, and so on and so forth. The sheet is true until this level, the seventh level. So let me explain why this is true. We have $400 in drawdown remaining, right? If we earn money, we are going to increase our drawdown, right? So the 396 becomes 720. The drawdown increases to 520, then to 631, and so on and so forth. Around this level, let's say sixth level, we will have $1,846 dollars of drawdown, and we won't be risking much. We would be risking $400 or even $350 for the trade to get to this level, right? And uh, one thing that is missing from this sheets is I have a payout factor included here. So 100 and $200 are reduced from the account. Even then, we will be making it. So this $1,170 gets reduced to $1,070. So $100 payout has been taken. I was I included this payout factor because I was thinking about taking payouts on a live account, but this is a pro forma account, so the calculations are a bit off. But uh, if we include these 100 and $200, we'll be surely making our drawdown back. So we will have $2,000 of drawdown, and even more than that. Technically, we cannot have more than $2,000 of drawdown because of the end of the day trailing system. But still, $2,000 of drawdown can be achieved can be achieved with 6 net positive trades. So we can have losing trades here, but net will have to be positive. Another thing which happens here is the profit we just made gets into the risk. So it's a staircase system. Let's say you are on the first staircase, the bottommost level, $396, and uh, you make $123 of profit by risking $99, right? This profit will be risked in the next trade. So if you lose the profit, you will be back to the square one, right? So if you make your first positive trade, you get to 520, and you lose one trade, you will get back to square one, which is $396. All we want is 6 net positive trades, right? 6 net positive trades is all we want, and we will recover the $2,000 of drawdown. So we won't be in any drawdown, right? Then comes the clearing part. So currently I will have to make $3,137 as far as I remember the number, right? So when I get to the $2,000, the drawdown won't increase because it's a end of day trailing drawdown. I won't be explaining it here, but figure it out yourselves. You should know it if you are getting the performs end of the day trailing drawdown. I thought it was easy to figure out the end of the day trading drawdown, but it's not. It's harder than you think. So the $2,000 mark, as soon as we reach it and fulfill our drawdown, refill our drawdown, then we'll be risking 25% of it, so it will be $500. So you make $500 two times, and you have passed the challenge. Make $500 two times on the account after refilling the drawdown. And to make $500, we won't even have to risk. Uh, we won't even have to target 1.25 RR. So all of this calculation is done on 1.25 RR. We don't have to make 1.25 RR. We can accomplish it with 1 to 1 RR. So let me write it here. Make $500 two times with 1 to 1 RR. Risk $500 and try to get $500 that way. You will make $1,000 over the $2,000 drawdown, and the $137 also has to be made, but it's not that significant. So if we see this system, the drawdown gets cleared in 6 trades, right? If we compound it, so this is a compounding method, right? And if we don't compound it, it will take us 20 trades at least. Not 20. If I risk $100 here, which is my standard risk, 25 percentage of $390. If I risk $100 to get to 2000 with simple interest and not compound it, I will have to get 16 trades. So the 16 get reduced to 6 trades if we are compounding it, and compounding is this is why compounding is the biggest wonder of the world. Then Now it's the turn of the account. The account gets cleared in 8 trades, right? So we don't need to get too much. We don't need to be playing with this account for years or months. We just need 6 good trades, risk reward 1.25, clear down 8 trades, and we will be clearing this account. So it's easier this way to maintain your psychology. You won't get into FOMO or anything else. You will keep your head calm. Right. So let's update the psychology part, the rules part here. It says 30 to net positive trades. But no, let's make it 8. So you can see by compounding, we just made it 4x easier, right? Risking 25% is the number. Now also, I don't want to touch why I'm still trying to make it, right? So I have $396 remaining. Let's say it is 400, right? $400 to make $3,000, right? I started with $2,000 of drawdown. Okay, so currently it is 5x harder for me, right? 5x harder. Another thing that comes up is I will have to make 7.5x. The profit to drawdown ratio is 7.5x. If my calculations are correct, rather than 1.5x. So on the surface, it seems pretty stupid to be continuing to use this account. You should just try to wing it, risk $400, and if you win $600, you will get to $1,000 and just try to wing it. Right? It's a safe strategy for those who are having loads and loads of money in their account. I don't, and I don't want to risk more in terms of the real money. So I have given $76 to this prop firm, and I want to just uh, make it my last payment to them before I pay out. And one more important thing is that if you lose one account, you are losing 10 percentage. Let's say if you lose two accounts, you will be losing 20 percentage. You can do it n more of times and you will be losing percentages again and again. One thing you should ask yourself if you have blown more than two accounts is that are you even a good trader? Are you even a profitable trader? Does your strategy work? Do you have the mindset to become a trader? Because you are losing money. You are just losing 10% on a spell. Good trader and you follow good risk management, you will never blow. Never. Always. If you are starting with 400 euros, you blow. Might have a down, but you will do it because you have an edge working in your favor. So, time, questions. you should ask yourselves that why are you even trying to pass it for if you are not able to design, if you don't even believe in your strategy, your strategy doesn't work, or your mindset is not that right. You should save your money and invest it somewhere else. That's good, right? So for me, I am still continuing this account because it's a challenge for me. I am not a profitable trader, but I am trying to be. I am trying to calm my nerves. I am trying to follow my rules. And the biggest reason I am doing it live is because I have to be accountable to myself. I no viewers are watching it right now currently. I have zero views on my live streams. The only views I do have is me checking if the audio is correct or not. So the reason I am doing it is I am trying to be accountable with myself. And if I give up and risk all the $400, then I won't be accountable to myself. I won't follow my risk management and money management rules. And then I will have to figure out how to arrange funds for the next account. And that cycle repeats itself. Most probably, if you are seeing it down the way, you would have blown several accounts. Most probably. Ask yourselves this question: are you even a good trader? Do you even deserve to get a second account if you have blown the first one? Imagine if someone else put their money in an account and you just blow it. Are you even a trader if you blow an account? Or are you a gambler? I would like to be in the first category of a trader, of a profitable trader. And that's why I am trying to stick with the challenge. And that's why I have strategies to change these 32 trades into 8 trades. I have worked on it and I believe in my edge. The only thing I'll have to do is execute correctly, and that's where the next week comes. I will come back with a better plan of action. So, this is the checklist I'll have to follow. So, have a strict trading plan, which will be a rule book, and I will show to you before I place a single trade next week. Have a strict trading plan, a rule book, which specifies every single trading decision. So I will be referencing that rule book again and again. Some of the rules are written here. How I would take my first TP, how I would have my first runner. I will be explaining those in details. So the same is with the risk management and the money management part. I will be also having rules about the entries, how to do top-down analysis, how to figure out if we have an entry, if we have a setup. Everything will be rule based from now. Won't be trading any won't be taking any trades which are outside my playbook. This is what I have come after the stupid losses I had in the previous New York session. Sorry, in the previous London session. I have blown the profits I had made yesterday, and I am in deep drawdown. This challenge is harder than I thought. First of all, and another thing is that because it is harder, because I am in drawdown, it gives me an opportunity to have the glory, of having this deep of drawdown, not even taking a single payout for my life, and still making this money, still clearing the account, and then eventually taking payout. That's it for the session. I will stop streaming now. See you soon. Traders.